I'm Chris Preston.
And I'm Brad Simmerman.
And welcome to Street Check, the best podcast in the history of Cabot Wealth Network. Happy holidays, everyone. Brad, do you consider yourself more of are you more of a Scrooge around Christmas, or are you like a Clark Griswold, stapling lights to your roof? 10,000.
Uh, okay. So that's a tough call. We have two Christmas trees inside, but they're both fake. The exterior
That
lights,
equals like one real one. That's good. Yeah.
well, we used to do the real ones, but allergies and
I got you. Okay.
interior quality stuff.
Yeah.
For the exterior lights, my hack is to have a cutout of the Grinch that's stealing like one strand of lights from the roof, so I don't have to get up on an extension ladder to string lights all around the house. So I'm probably somewhere in the middle, but I think probably more Grinch than Griswold.
That would have been my guess, just, do your pessimistic market takes, but I don't want to pigeonhole you.
So, I worked retail for a long time in high school and college, so I've had my fill of Christmas music. I have no
Yeah.
patience for Christmas shopping.
Yep. Well, I'm with you
You know,
there. Yeah. It takes forever.
wh- where do
I,
you land?
I, I think I am very Grinch-like until it hits December. Like this playing, like there's a local station here, radio station here that starts playing Christmas music like mid-November, maybe early November. And I'm like, I will not go to that channel until December. Even my kids are like, Christmas music. I'm like, no. Uh, and Black Friday, as much as it's great for the US economy, I can't jump in that early, at least not with, 2 feet. I'll dabble. But yeah, once December, I mean, I'm in Vermont. It's hard not to get in the Christmas spirit with snow falling. It's falling right now.
Yeah,
So
I mean, obviously it's like sunny
tipping.
and 60 right now. I'm amazed you guys still listen to the radio in Vermont. Do you guys have cell phones yet, or is that
No,
still coming?
no, we
Okay.
don't. You're lucky we're even able to do this on Zoom. Um, okay, so tell people what we have in store for our final episode of 2023.
All right. Because we didn't learn our lessons last week, this week we are going to each make some predictions for the year to come for 2024. Um, mine are predominantly around what could be like more mega trendy than individual stocks. Where did you land, Chris?
Yeah, mega trendy. Yeah, I did not do any individual stock stuff, so hopefully we don't have too much overlap here. You want to go first? You want me to go first?
Yeah, I'll go first. So my first one is going to be that water becomes a trendy trade again.
Okay.
That was a big trade a couple of years back, and it's something that is still on people's radar with drought conditions in like the Colorado River and the difficulty of getting potable water in places. But I think it gets trendy again for a completely different reason, which is the amount of water consumed by large server farms and AI. Specifically, one one conversation with something like a chat GPT, so in the neighborhood of like 20 questions, is uses the equivalent of a bottle of water. And there are millions of calls to chat GPT, to comparable large language models every day. And with small businesses leveraging it as an inexpensive way to integrate AI into their own offerings, that number is just going to grow. So you look at the water consumed by firms like Amazon, Microsoft. I think water becomes a trendy trade again. FIW is a
Looking at the chart now, yeah.
water focused ETF. It's been performing well this year. I think it's back near all-time highs, but not quite there yet.
Very
Um,
close. 93.77 now. All-time high was 94.96, at least closing high, late November, or mid-November 2021. So yeah.
yeah, so it's knocking on the doors of all-time highs. And climate stuff aside, just the water consumption by these large server farms, large language models, the training demands, I think that's going to make water a trendy trade again. Probably most notably as we get towards the summer months of next year.
Yeah. I like that one. Yeah, you're right. I hadn't thought, I feel like when water was more in the news, which, basically every summer now,
Yeah.
is when I think more like, I should invest in water. And then like, this time of year, I sort of forget about it, but it's really trendy. The FIW, like you mentioned, it's up from 77 to 93 since October 23rd. So, I mean, that outperforming even the market during that time. Yeah, I think that's a good plan. I like your angle on it with the water consumption by big tech. And it works out well because the irony is if either you're right or you'll end up needing a lot of water because you'll be eating hot sauce when we do our mid-year 2024 punishment episode.
So I will say that the sort of outlier on it would be right now the consumption is all potable water predominantly, just because that's how our water distribution infrastructure works, right? We don't ship gray water or like desalinated seawater or stuff like that for the
Right.
most part around the country. So there's a potable water demand. I guess you could have, if Microsoft starts investing heavily into water infrastructure, some efforts or some results that lessen their demand for water. But I believe their target is to be water neutral or water positive sometime in the 2030s. So you've probably got a decade of growing consumption, assuming these tools continue to be popular.
Yeah. Okay. All right. Yeah. Good call. Mine is simple. S&P will be up double digits again, double digit percentage again next year. So while I don't think numerically, so S&P is up what, over 20% as of now, but like half of that, maybe even more, about half of that at this point is sort of a hollow, like the first 10% of that is like a hollow, because it's all Magnificent Seven driven up until, as I wrote the other day. So yeah, it's up 22.8% right now for the year, and was that right around all-time highs until it pulled back yesterday. Um, until basically November, outside of maybe like June, July with the AI stocks, it, it was all Magnificent Seven driven, and we've seen that in the S&P equal weight index, which I mentioned a bunch here. That's actually outperformed since the start of November. So the real rally just is less than 2 months in, a month and a half in, and once rallies get going like that, they're hard to stop. In a good way, obviously. So I think in so many technical indicators, Mike Santolo, who's our growth investing expert, but also an expert, award-winning market timer, market historian, says that stocks are most overbought at the beginning of a new rally, and right now is that time. We're at the beginning of a first real widespread rally, and really in 2 years, and they're extremely overbought right now, which is why I think there will be a pullback, and I'll get to that in my second prediction. But I think this rally is here to stay. I think we're in the early stages of extended rally that goes beyond the Magnificent Seven, and I think while I don't think we'll match 22% up in the S&P next year, I could see at least half that without breaking a sweat.
Yeah, I think that's certainly a reasonable take. We've said it before when it comes to like overbought, oversold conditions. Those tend to be reversal flags. If a stock or an index is trending, overbought just means that the trend is continuing. So when you've got a directional move in the market, don't read too much into overbought and oversold. And just like Mike says, when you've got a strong trend starting, it's going to look like it's overbought, but that's sort of definitionally what happens with a trend. I'm still maybe a little bit on the side of we get some rotation out of the mega caps, but that's not going to
Yeah.
stop everything else, the other 493 stocks in the S&P 500 from picking up the slack and
Right.
outperforming.
Yeah. I think the equal weight will outperform what it has done this year. And I think the S&P will, maybe not significantly, it will underperform what it's done this year. Equal weight is up 10% this year. I could see it being up, 15% or something next year, but the S&P only being up 10% or something like that.
Yeah. Yeah, I think that's a good take. Well, I mean, we'll check in on it
Yeah,
6 months
see.
down the road, and
Yeah.
some of us will be paying prices for it.
Yeah.
All right, so I'm going to move on to my second call for 2024. This one concerns your Eli Lilly's and Novo Nordisks. Weight loss drug supply constraints will wear on those stocks in 2024. The demand is obviously still there. Whether it becomes a sort of widespread drug like insulin or something is sort of yet to be seen, but the demand is holding up. What's been limiting them is manufacturing capacity. Novo just invested $6 billion to increase their ability to supply their semaglutide drugs. But it's a multi-year process. It's likely to pay dividends for them in years and not months. So I think that those supply constraints for Eli Lilly and for Novo are going to hamper them a little bit. But I will confess that it's sort of a easy target given how much those stocks have run up these past couple of years.
Yep.
That doesn't necessarily make them a bad long-term call, especially if we start getting longer-term data that shows that these are safe, effective, no significant side effects, things like that, that put them into sort of the regular pipeline for weight management options. If we get that and they're just dealing with really, really high demand for years, that'll keep share prices elevated. But I do think that some of the investors that bought thinking that they're just gonna, to the moon will probably be a little bit disappointed when earnings numbers are coming out and they're saying, yeah, we sold the same as we did in Q3 of last year because we're limited by these supply constraints. So I think that could temper those a little bit, but I don't think it invalidates the trade.
Yeah, that's a good call. Speaking about, Lilly and Novo Nordisk, specifically, I could see while those, weight loss products become even more mainstream and more, demand increases even more. I think I'd be surprised if the stocks replicate 50% plus gains again next year. I could see those sort of leveling out, in sort of a buy the rumor. What is it? Buy the rumor, sell the news. Maybe not. It may not be a sell the news, but I could see a stalling, sort of in the way, not as bad as this, sort of like Pfizer, BioNTech, and Moderna, how red hot those were when the vaccines first came out and were, really just starting to become like a mainstream thing. And then once everyone was taking them, the stock started to, plummet. I don't think those stocks will plummet, but yeah, I mean, do you think in terms of, do you think the weight loss trend will be more real world impact on consumer staples or perception impact on consumer staples?
My knee-jerk reaction, and I think we discussed this, is that there's no way that Coke sells less Coke because people are on weight loss drugs. Evidently, I had found after the fact something like 10% or 20% of the consumers of a lot of these snack products make up like 90% of the consumption. So, maybe if we do see widespread distribution of these sort of these semaglutide drugs, maybe there is an outsized impact on it. I can't imagine it happening until at least there's widespread availability. So that's another thing that's probably years down the road.
The price point alone on, Manjaro and what is the name of the
Zepbound and oh no, Ozempic is the other one.
Yeah. Price point alone, what is it, like 15 grand or something like that?
For a year, I think is in the 15,000 range, and like insurers don't cover it because they don't have to cover obesity drugs. Maybe if we get maybe they become so popular that we get legislation that comes through that then compels insurers to cover them. There are probably paths to affordability, but even that, how quickly does legislation get through the government now? It practically doesn't. So I think you've probably got years of attractive trade left. And I just think that that if people start really focusing on their ability to meet the demand, that there's room for disappointment. I'll leave it that way.
Right. Yeah, I think I'm still, skeptical that even though given as popular that it already is, I'm still skeptical that it's mainstream enough or, importantly, affordable enough that, the average American is going to stop drinking Coke and Pepsi or,
Yeah.
or going to McDonald's or whatever.
Yeah,
Because of,
I don't think I've met anybody that in person that's ever used it. I assume you're in the same boat, so it's not.
no.
It's getting headlines, but I don't think it's widespread.
Right. Yeah. Yeah, here in Vermont, people just sort of ski it off and brave it. But okay. So no, my number two is somewhat linked to my first one. The Fed will not hike rates in the first quarter. I don't think it'll, I mean, sorry, cut
I was
rates.
gonna
Yeah.
say that's
Yeah, yeah, yeah. There'll be no
not that
hikes.
bold
No,
of a take.
misspoke. No. So right now, the FedWatch tool said, according to the CME FedWatch tool, that the Fed is expected to cut rates in March. Here, let me look at so 73% chance, 72.7% chance. Target rate is 500 to 525, which would be down 25 basis points. Um, I think that's a little overly optimistic. I think they won't do it until May. And I think they'll early come January, I think they're going to start tempering their language, sort of not completely go back on the tone of the last meeting because I think it was intentional, but I don't know that they meant we're doing this in the first quarter. I think the market is interpreting that to me. They're going to do it as early as the first quarter. I think it won't happen until May. And I think because of that, I mentioned I think the S&P is going to be up double digits next year, but I think first quarter is the time when, unlike this year, where coming off a bad 2022, first quarter was really good. Again, thin with Magnificent Seven, but I think the pullback will happen, and I think what'll fuel it will be Fed being a little less dovish than they've said. I still think they'll cut first half of the year, but I don't think it'll happen until May.
Yeah, I think you can definitely make a case that with inflation coming down, there's probably less urgency there to
Yeah.
really signal those rate cuts. The market's already pricing them in. 10-year treasuries below 4% now, 30 years below 4%, and the 2-year treasury is inverted by half a percentage point. So it is itself coming down as well, and it's doing sort of what we had hoped for towards the end of this year.
Yeah.
Um,
Yeah. The January 31st meeting, that's the next one. 85. No one expects them to cut then, but I could see the language being a lot more tempered. And that could be, and probably even before then. I'm sure even before then, because all these Fed members love to talk. Um,
what what did the Fed Watch say for March for the March meeting?
72.7. Oh, no, it's gone. Maybe I had the May one. No, wait, wow, it's changed just while I've had it up here. 71.3% now. So I think this podcast does move the market. So as soon as I started talking, it went down in a percentage and a half. I should have
Yeah,
known.
I don't know. I mean, gun to my head, that's probably more of a coin toss, the March meeting. But I totally see a case in saying, hey, yeah, doesn't happen in March, happens in May.
Yeah.
We get inflation coming down, if we get equity markets continuing to perform well, all
Yeah.
those factors,
And you see it as a coin toss. The market sees it as a,
70%.
three
Yeah.
quarters, chance. But, it's already coming down, it seems. So maybe that'll be tempered. So anyway, that's uh, I think it's possible the first quarter could be the weakest quarter of next year. Although leading up to an election is always always hairy too. But I think we'll get at least somewhat of a pullback in the next few months.
All right. Okay, so my third and final call for 2024, just to make it nice and neat, I'm going to say that there will be twice as many IPOs in 2024 as there were in 2023. So we had over 1,000 companies come public in 2020. In 2021.
Yep.
And that predominantly was by SPAC, and it was easy money. Everything was, everybody remembers 2021. 2022, there were 181 IPOs. As of right now, this year, 153 companies have come public. So just again, to put a round number on it, we'll say that there will be over 300 offerings. Most of them will not be via SPAC. That seems to largely be a relic of the past. My rationale for that is partially because of the VC sort of funding timeline. Historically, the time from initial seed funding to an IPO is 5.1 to 5.8 years. 2018 was the largest VC funding year aside from 2021 in history. So you've got a lot of companies that have 5 years of sort of track record and development and building, and you've got tightening conditions for VCs. They're going to be looking to convert some of those early investments into actual capital. There's over 1,200 unicorns. So those are privately held companies that are trading with a valuation in excess of 1 billion that are currently out there. They sat on the sidelines in 2022 and 2023, right? The market conditions weren't great. Interest wasn't there for IPOs, ARM and Instacart aside. So I think 2024 is going to be a much more rapid year for IPOs. Now, maybe we don't get to 300. It'll certainly exceed 2022's totals. Two of the big ones that are sort of on everybody's radar are Shine, a Chinese apparel company. I think it's Shine, SHEIN, and Panera Bread, which went public about 6 years, or I'm sorry, which was bought by private equity back in like 2017. They're looking to go public. So I think you're going to have.
They might wait till the whole lemonade thing passes.
Oh, I didn't even consider that headline. So maybe they are later in 2024. But I think it'll be a much more rapid year because of some structural issues in VC funding and these number of unicorns that are ready to go public and just haven't been able to for the last few years.
Yeah. And would you invest in any of them in the first few weeks, even months?
No, as a general rule, stay away from IPOs unless, well, I mean, obviously with some of them, if you can get an initial allocation, they're solid. But for the most part, if you're buying them in the open market, it doesn't tend to turn out well for you as a retail investor.
Yeah, I like the 3-month rule, but you could even stretch that out. First earnings as a public company is a good barometer. But yeah, no, I think the environment is ripe for IPOs right now, and companies are starved to come public after the last couple of years. So I think you're probably going to be right there. I don't think you'll be punished for that one. What'd you say? Well, just to get it on the record, double the amount.
So double, so 300 plus. Since we're going to score it at some point in the future, I will say 300.
All right, writing down 300 plus IPOs. Okay. Yeah. All right. All right. That might be a year-end special. Next year, we'll see. Okay, my final take. Chinese stocks will not only outperform US stocks, I think will double US stocks next year. So yeah, I said, well, I think, a 10, 12% gain in the S&P seems reasonable next year. I think Chinese stocks are drastically undervalued right now. It's understandable. So the Shanghai Stock Exchange is down 6% year to date, and they have, at a time when the last couple of months, as U.S. stocks have been on a tear, Chinese stocks have continued to sag. And a lot of it is just its narrative, with good reason. China's economy did not explode the way coming out of its zero COVID, lifting its zero COVID lockdown measures, has not exploded the way that people predicted. But it was still, through the first 9 months of the year, 5.2% GDP growth, more than double the U.S. economy. Well, the U.S. was 4.9% in the last quarter, but through the first 9 months, more than 5% GDP growth is not bad. And it's predicted to be about 4.2% in 2024. That's not what China's used to. They're used to, in the 2010s, every year is like 7% plus. But that was never sustainable, COVID or no COVID. And I think, the companies have gotten overly punished. Meanwhile, the economy is recovering. the average, let's see, the price to earnings ratio of the Shanghai Stock Exchange as of now, forward ratio is just under 12. It's a premium. Sorry, not a premium. The discount to U.S. stocks and a discount certainly to their historical value. I've mentioned many times BYD, electric vehicle maker. It's in a year in which it's not overtaken Tesla, but made Elon Musk sweat in a tangible way, or at least one of the many ways he has this year. Um, it's only up. The stock's only up 6.5%. I mean, that's better than the average Chinese stock, but still, given its fundamentals, I expect that to bounce back. Pinduoduo, which Larry Chung, when he was on here, was gracious enough to tell us about. He's been very right. Upstart e-commerce company. That's the rare Chinese stock that's done quite well this year. But I think more Chinese stocks will join the fray next year as that slow growth China narrative fades a little bit. Investors will be more open to buying, and especially if people start getting scared of buying U.S. stocks at all-time highs, they might be looking for discounts, and they'll land on Chinese stocks. So Chinese stocks outperform S&P next year, probably double it.
All right, well, lock it in, and we
Yeah, write that
will.
down.
Yeah, we'll check back in 12 months. Yeah, I think there's definitely a good case for international stocks, especially. And there's a contrarian play with China. Everybody's terrified of investing there, of doing business there. That's why you've got 12 times forward earnings for valuations. That's like 60% of what most U.S. companies are trading at. So it's definitely, I think at this point it's probably a contrarian play, but I think
Yeah.
3 months from now it's going to look like, or it could look like maybe a smart value play or a bold play at least.
Right. Yeah. I mean, think 2 months ago, like buying any stocks outside the Magnificent Seven almost felt like a contrarian play, and look how that would have
Yeah.
turned out. So yeah, what is it? When there's blood on the
When
streets,
buy when there's blood in the streets, even if it's your own.
even if it's your own. Yeah. So, well, it's your own part. Hopefully, it doesn't apply here unless you own BYD, which I have in stock of the week. But the blood's been, modest. Actually, it hasn't even been much blood. I said it's up for the year slightly, um, but it hasn't lived up to what I think it can be. Okay, so yeah, this is as we mentioned, this is our final episode of the year. We're off next week. Cabot's not closed, but skeleton staff next week. I'm out. Family, you're around next week, Brad, right? Yeah,
Yep, I'll be here.
yeah. You didn't want to Colin Cowherd it and just go solo. I'm just kidding.
I mean, the audience already listens to me like professorize and just rant about stuff for chunks at a time, and without you in here to break it up, it would be interminable. So I'm not going to subject our audience to that.
Yeah, yeah. What was that? What's his name? The aviator, like the come in with the milk thing. Did you ever see that Scorsese movie?
I
What's the
did not.
aviator? What's that guy's name?
Was it Howard Hughes?
Howard Hughes. Yeah, yeah, yeah. I could see, left to your own devices, like going 10 hours and just continuing uninterrupted, and someone forgot to hit the end of the record button. Um, I'm sure Madison wouldn't allow that to happen ever. But well, happy holidays, Brad. And yeah, what are your plans? Just family at home?
Yeah, family at home. Go to my parents, see my in-laws. Brother's coming into town from California, so we'll see him and his family and make cookies and do all that and drive around Phoenix for a while
Yeah.
just to hit all the houses.
Phoenix at Christmas. It must be pretty magical, I would imagine.
It's so special.
Well, happy holidays to everyone, and thank you again for joining. Thanks all year, sort of helping us build this up to where there will be a year two. And if you haven't already, as always, subscribe, give us hit the like button, 5-star rating, all that good stuff. We will see you in the new year, and hope everyone has a safe and happy holiday.
Yeah. Merry Christmas, Happy Hanukkah, happy whatever you celebrate to you and yours.